So hello guys, in this video I'm going to share with you the right way to actually take your trade when your market gets into your supply or demand levels. So recently I've made a lot of videos about trading supply and demand and all of that, including the liquidity concept. But a lot of you seem to not be getting it right when it comes to taking your trade when the market eventually gets to your key level. And that's what I'm going to solve for you in this video. I'm going to give you the two approaches of actually taking a trade once your market get there. Now, when I share with you these two approaches, I will advise to go back test it and then pick only one, because taking too many approaches to execute trade will actually confuse you. Like for example, here are setups that I've done today. Today is currently Monday, as you can see. It's Monday 28th of October. Now I've made some setups here. You can see them right now. Now when this trade finally gets here, how do I take my trade? And that's what a lot of you are suffering from. Now let me go back to the charts and then my backtesting software and I share with you how you can actually get that done. Now, for example, let me say a market is moving in this manner. And then, okay, let me first of all get your demand level. Now, let me say a market moves like this, like this, like this. And then you as a supply and demand trader identified this area as your demand level. Now, let me say you identify this area as your demand level. Why is it your demand level? It is your demand level because you basically had a market shift here. So here becomes your market shift. Here becomes your break of structure. And then here becomes your liquidity. Now here is your liquidity. You've had all like this. Now the main problem a lot of you have is that how then do you take the trade? Now when it comes to taking the trade, the first approach I personally use to take the trade is simply I wait for this market to trade back here. Now once the market gets into this area, I wait for the market to give me a bullish close outside the area. Now once I get this bullish close like this on a 30-minute time frame, then I will take my trade. Basically, that simple and straightforward. So once it gives me this bullish close outside the demand level, all I'll simply do is that what? I'll get my entry, and then my take profit, usually the recent high, and then my stop loss position is about either below the the demand level like this, or if the demand level is very far away from where the candle closed on that particular time frame I'm waiting for, then I'll adjust it to about 30 pips or 40 pips maximum stop loss. But in most cases, I stick with a 30 pips max stop loss. And then I just set it up like this and then I let it go. And then if it hit my take profit, good. If it doesn't hit my take profit, also good. Now, this is simply the first system of how I basically pick up my entry when I'm trading the supply and demand model. Now, let me use the real market to do an example for you. So now, this is a pair between GBP and then USD, which is Great Britain pounds, and then the US dollar. Now, clearly, we all can see that what on a 30-minute time frame, here we have what we call the market shift to the downside. And then after that, right here, we have a break of structure. As you can see, we have a break of structure. And then following that break of structure, we also have another break of structure right here. So now this simply tells us that what the market is on the sell side. So now once I see this market on the sell side like this, what I'll simply focus on is identifying my supply level. Now, for example, in this particular market here, here's my clear supply level right here. Now I have my supply right here. Make sure that I cover the whole candles that form the area. Now here is the supply. So on the 30-minute time frame, this looks like a range supply. However, if you go over to the higher time frame, you see that that is a single bullish candle that the market hooked up like that. You can see it there. It's a single bullish candle. But on the lower time frame, you are going to see it as a range supply or something. That's why I see that I basically trade the 4-hour and then the 30-minute time frame. Now, after I set it up like this, what I'm waiting for next is that what I'm waiting for this market to actually trade into this area and then give me a bearish close. Then I'll take my trade. So for example, this one now, let me adjust it to the 30-minute level because I only focus on the 30-minute levels. Now over here, now I'm going to put here as the liquidity pool here, which has also swept its own high as well. If you know about this trading strategy, you should understand this already. Now, next up is simply I wait for this market to trade into my area of interest, which is the supply level. Now, let me go back. Now, I'm not going to act like I don't know how this trade played out. I personally know it because I only use my own personal trade for this example. Now, let me cut it off fully. Okay. Now, here is it. You can see now, based on my previous drawing, if you recall, the market trades into the area, which is what this bullish candle did here, tap into the area. Now, after this, I wait for a bearish close on the 30-minute time frame outside the level. Now, for example, here is a bearish close that we've got. We've gotten a bearish candle here that closed outside the level. So this is simply it. I identify my supply level or my demand level. I wait for the market to go and tap the level, and that gives me a bearish close outside. Now, once I get that bearish close outside, provided that what the level wasn't broken and I get this bearish close outside, I'm basically going to take the trade. Now, you see, this bearish candle that closed outside here becomes my area of interest. So here becomes where I'm selling it from. With my stop loss, most cases, I would advise you keep your stop loss outside the level like this, because there are times whereby this market might retrace back into this box again. Now, after this, a minimum target of 1:2 or 1:3 is basically okay. So, for example, let me go with a 1:3 for this particular one here. Now, looking at this one right now, let's see how many pips we are using as stop loss. This exactly, as you can see, it says is below 20 pips. This is 18 pips. To be specific, this is 18 pips. So 18 pips here is 18 pips on GBP USD. It's not really that tiny, so it's a good stop loss position. Now, after this, let's play it and see what happens. Now, you see, the market even went below the 1:3, but I usually like looking at the 1:3. So now here we have our take profit smash, simply like this. Now, this is the first method when it comes to actually trading this strategy. It's simply you wait for the market to trade into the area, gives you a bearish close outside if it's a supply level, and if it's a bullish level, you wait for a bullish close outside. So here you see the market tap into it immediately, gave us this 30-minute candle close outside, and then we took the trade. Now, if you are assuming you did your higher time frame on the 15-minute time frame, then you wait for your close on the 5-minute time frame. So for me, basically, I pick my supply and demand levels on the 4-hour and 1-hour time frame. So I use a 30-minute candle close to judge it. That's basically how I do it. Now, this is the method one on how you actually pick your entry. Now, as I already said, you need to backtest them over and over again to know which of them actually works for you, as there are two methods. Personally, this is the method I go with, and the reason why I go with this method is simply because it has yielded me more results. However, there are people that also had decent result with the other method as well. So now this is the method one. Now, with the method two, as I said, I'm going to use the same trade to tell you that what this method can work regardless of the entry model you pick. Now, with the method two, instead of waiting for a 30-minute close, once the market comes to your place of interest, you go over to the 15-minute time frame. Now, this one, it requires more patience for you to actually get it bare. If you implement it right, it also works really perfectly. So let me show you how this method also works. So for example, the market has come to our supply or demand level. Now, for those of you who are basically new to this strategy, who don't know the exact strategy I'm using, for example, in this video, let me just show you a video that will cover every single thing that you need to know about it for you. So now, for those of you who want to know this exact strategy you are trading, the strategy is being covered in multiple videos on my channel. This video here, as you can see, top-down analysis. I actually use that strategy for the top-down analysis. I use that same strategy here. I use same strategy here. Over here, I covered more in depth about the strategy and every single thing you need to know. So all these videos, also this one here shows you how you can identify your supply and demand level. This one also covers the same strategy. So I'm basically trading the same strategy over and over again, broken down in different videos as well. And you can see the same strategy that I've implemented on all my setups for today. So you can see I'm currently waiting this GBP USD. I have two levels. Here's a 30-minute level. You can see that it's just a week, and then here is a 4-hour level. So if this level doesn't hold, I believe this level is going to hold on GBP USD. If I should convert to the 30-minute right now, you are going to see it. You can see here's a 30 minutes level that I'm basically waiting for the market to come to. Now you see, once this market gets here, gives me the close, then I'll take the trade. You see this stop loss and everything I set here, I will adjust all of them once the market gets there. So this is basically a 15 pip stop loss position. Now, Back to our system. Let me come over to the trading view over here. Now with the method 2, once the market comes here, what you simply do is that what you wait on the 15-minute time frame. Now on the 15-minute time frame, you are basically waiting for this market to give you a change of character. Now let me show you how that actually works. Now let's play it and see if the market gives us a change of character or a market shift on the 15-minute time frame. Now I'm just going to play these candles one after the other. Okay. Okay. Now let's see if we get the market shift here. Okay. Now you can see on the 15 minutes, we've gotten a market shift here. Now on the 15 minutes, we've gotten a market shift here. Here becomes our market shift on the 15-minute time frame. Now the next thing we'll do is that what we'll identify a new supply on the 15-minute time frame, and that supply becomes this bullish candle here before the bearish one. Now this bullish candle becomes our 15-minute area of supply. Now once we have this, now we are now looking to take from this level. So with the 15-minute method, now all you simply do is that once you identify this supply here, the next work you do is simply just keep your entry right at the top here. You just keep your entry right at the top here, your stop loss behind here, and then your take profit also a minimum of 1:3. So here is a 1:3. Now let's see how many stop loss you are using here as well. Now here you are using about 15 stop loss. Earlier we used 17 stop loss, but with the 15-minute method we are using about 15 stop loss. Now once you have this market shift, you identify a supply level behind it. If there's no supply level, you let it be, but if there's a supply level, you identify it, and then just set your sell limit. If it's a supply level, you set your sell limit like this, and then you just wait for the market to trade into it. Now let's see if it taps it. Taps. Because once you tap it like this, all you simply do is just hold your trade and then let it play on. Now basically all the two method actually works. Now a lot of you, when I'm doing my live streaming, a lot of you keep asking me, should you set limit orders or you shouldn't set limit orders. Now with a 30-minute entry model, I don't advise limit orders. Wait for the market to get there, get your 30-minute close before you take the trade. However, with a 15-minute entry model, you can set limit orders. Why? Because this one, you first of all wait for the market to get to your supply or demand level. Now, as the market gets to your supply and demand level, you don't take the trade immediately. You wait for the market to give you a 15-minute market shift or a 15-minute change of character. Now, once you get down, then you identify the supply or demand that led to that change of character before you set your limit order. So that area becomes your area where you set your limit order. So the 15-minute method allows you to use limit orders, but the 30-minute method doesn't allow you to use limit orders. Why? Because the 30-minute method takes instant trades, whilst the 15-minute method gives you more of a two-step authentication. Why? Because the higher time frame shows that what you should take a buy. Now the lower time frame is also telling you that what you should take a buy. But with the 15-minute on, you are taking the market on arrival. Immediately it taps there, you are taking it. On the 30-minute on is different. So that's why if you want to trade this strategy, my advice to you is that focus on one entry model and stick to that one, because both of them literally work. Now you can see I use the same trade for both of them and you see how it works perfectly well. So now personally, I use the 30-minute time frame. I use the 30-minute approach. It doesn't mean that it's better than this other one, but personally I go with the 30-minute approach. So if you are someone, you just have to, basically what I did before I decided to take on the 30-minute approach is that what I did a back testing on both the 30-minute and 15-minute time frame, and I see that my system, which is my emotions and everything, aligns perfectly more well with the 30-minute approach than that of the 15-minute system. So I also advise to do your own back testing and decide whether you want to go with the 15-minute approach or the 30-minute approach. So hope you find this video helpful. Drop a like, drop a subscribe. Also subscribe to this YouTube channel if you are new as well. So this already said, have a lovely day. Bye.